Tony says that Tesla will miss deliveries and will go down to $150. Let's take a look.
Tony, you've got, I think a 150 price target on Tesla. It was close to there 2 months ago, but it's over 250 now. What makes you think it goes back down?
Look, I think Tesla stock is very difficult to predict in the short term. Our perspective is that, upcoming numbers won't be great. I think there's limited chance that Tesla will eclipse consensus expectations in terms of deliveries this quarter. I think margins will be down sequentially because they took incremental price cuts in the quarter.
Well, everyone already saw that Tesla cut prices this quarter, so I think everyone expects the margins to be down as well. That's no surprise. That should be already built into the stock price.
And I think, most importantly, when we look forward, Tesla's continuing to try and grow at very aggressive rates, 30% plus this year, 30% plus next year. And it has no new product offerings. And so
obviously there's no new product coming that is going to surprise everyone one more time. Do you see a new shiny product here? Well, I guess Tony does not.
How do you create incremental demand when you don't have anything new per se? And that's Tesla's challenge over the next, 4 to 6 quarters before we have some new lower price models. So
just because the Cybertruck is not going to be cheaper than a tiny Model 3, obviously it is not going to sell a lot, despite pickup trucks occupying the top 3 best-selling vehicle spots in the US. Of course, that somehow makes sense to Tony. I'm not sure how it makes sense. Certainly does not make sense to me or Gary Black. Gary Black presented these numbers here to us in 2020. Tesla launched the Model Y, and that year Tesla grew 36%. And then the next year, once the production started to really scale, the delivery volumes grew by 87%. And now, Cybertruck is going to launch this year, and it is projected that Tesla will grow 39%. But next year, Wall Street is projecting that Tesla's deliveries will only grow by 27%. Despite Tesla launching a completely new product that will not cannibalize existing offers, the Tesla Model Y, it did do some cannibalization. And despite that, the deliveries still grew by a lot.
That's our concern, is that Tesla will either ultimately fall short on deliveries at some point over the next 4 to 6 quarters, or that we're going to see continued price cuts to be able to drive that growth.
I personally, selfishly, still prefer that Tesla cuts prices more instead of doing advertising if needed to stimulate the demand. Because I think in the long run, Tesla would actually benefit more, because that would crush all of the competition for the next few years. Ford and GM are already having such a difficult time transitioning to EVs, and now if they look at their losses after Tesla's further price cuts, if they did happen again, they would be even more hopeless, and especially all of the startups, it would crush them. So in the long term, very selfishly, I think that would actually help Tesla. Although in the short term, Tesla stock would probably drop by quite a bit, which I would also like because I'm still picking up a lot more Tesla stock. But Tesla committed to advertising sort of now. So what I would expect to happen now is a backlog coming back, or price increases, or a combination of both, because advertising can be really effective at driving sales, especially the first time you advertise. I know, because I generated millions from running ads. Tony must also be assuming that Tesla will either not advertise at all, or will completely mess up every single advertising campaign, which is quite difficult to do if you're running ads for the first time. Which may sound like a bad thing. You're running ads for the first time, that means you don't know what you're doing. But because no one has seen your ads yet, even a bit of exposure will actually make a substantial difference. Because the products are so good.
How much does that matter, though, when there are all these headlines that kind of feel like the rest of the EV industry throwing in the towel and admitting that Tesla is king of the hill with this charging standard, and that Elon Musk was visionary in building out these stations? I mean, if you want to believe in Tesla, even if they have some near-term misses. It sort of seems like this charging narrative helps you.
Well, I think certainly it's an admission by competitors that Tesla has a really good network and they want their cars to be able to use it. I think competitors have admitted that, Tesla has a cost advantage, that Tesla's been a pioneer in EVs. So, clearly there are many positives about Tesla. It's just fully reflected in its valuation. It has an $800 billion valuation, which is essentially the valuation of the entire auto industry, even though they'll make less than 2 million cars this year, and the auto industry outside of Tesla will make about 78 million cars.
But none of these companies have a serious chance of solving full self-driving with mostly a vision approach. And certainly none of them have the Dojo supercomputer in the works. And they are also not deploying megapacks to a waitlist of about 2 years. We will also conveniently forget about Tesla's higher margins, Tesla's efficiency, Tesla's ability to spend a lot less money and still get a lot more done. So when you build a factory, you don't need to spend as much money and you still get it done faster. We will also ignore the fact that a lot of these auto companies are burdened with unions and that many of them are destined to seriously shrink and even go bankrupt. Their valuations reflect that. And then most importantly, every one of these automotive CEOs has created rockets from scratch that you can reuse and launch to space.
So I don't think this is a question of, Tesla's not known as a leader per se. I think it's really a question of what you want to pay. And to your point about the network, the charging standard for Tesla will become the standard in North America with all these OEMs signing up for it. But right now, Tesla has about 80% of the EV installed base in the US. So adding an extra 20% of cars that can use that network is not a big deal.
While relative to Tesla's future profits, especially from full self-driving, it is not a big deal. I think using that 80% number is a bit misleading because that implies that Tesla will maintain perpetually a market share of 80% in the US. Last year, Tesla's market share was definitely below 80% already. And over time, I do expect that number to keep going down significantly like it has everywhere outside of the USA. In the future, I would expect eventually, and it may take a while, but I would expect eventually to see more non-Tesla EVs in the US than Tesla EVs, eventually. Although that will take quite a bit of time. And despite that, Tesla will still keep growing its deliveries every year.
And Tesla's supercharging revenues last year were about $600 million, which is less than 1%. And again, when we think about, how many more EVs are going to be able to charge on Tesla's network, right now it's pretty small. It's only about, 20% on top of the existing 80% of the EV fleet that Tesla has in North America.
It almost feels unfair to sort of ask about the fundamental drivers of a stock that seems so liquidity and momentum and kind of trading driven, for lack of a better phrase, Tony. But I'm still curious, as you look ahead, kind of weigh the opportunities that they might have with more of these charging stations and whatnot. How big a risk is it that regulators more fully crack down on full self-driving? Do you think that's coming at some point?
I don't know if they'll crack down per se. I think there'll have to be higher disclosures. I mean, certainly regulators are not endorsing full self-driving, and Tesla has, somewhat indirectly been pressured to, put alerts on its cars for drivers to keep their hands on the wheel every 30 or 45 seconds. So I think, regulators have been relatively cautious. I mean, we have approval in a couple of states for early level 3 autonomous driving from Mercedes, but beyond that, regulators have been cautious.
I'm not that worried about regulators because we already have 7 states in the US that do not require a driver behind the wheel, assuming that full self-driving is basically safer than human driving. So robotaxis could be launched in these specific states first, and Tesla could focus selling vehicles just to these states mostly and launching robotaxis specifically in these areas first. And in the meantime, Tesla can work with other states and have some regulation approved. Well, ideally, it would be better if every single state could approve it immediately. I don't think that's really all that important or required for Tesla to create immense shareholder value.
Will Tesla be reprimanded in terms of false advertising or something more onerous than that? look, it's a potential wild card. I'm not sure in the near term that makes that much of a difference to the stocks. Sure, it would be, kind of emotionally or headline wise a negative for Tesla. But full self-driving revenues for Tesla are very small today. You only have, on average, about 5% of vehicles purchasing it when they purchase a car today.
Tesla's take rate of full self-driving will improve as full self-driving improves. That will, of course, take some time, but we are clearly seeing progress, and generally, consistently, we see the software becoming better and better and better with every single major update. And YouTube wants you to watch this video next, but if you haven't finished watching this Elon Musk interview, watch this one first. My name is Mal Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.